Let's start now. Um, so welcome everybody. We are going to talk about the ESG and alternative assets today. Understanding that responsible investments is the new norm and that the government of India has also mandated ESG reporting to not only the public sector banks, but also to the private sector banks. We at ICSR are they're marching for ESG reporting and also the give an investor's perspective. We organized this roundtable with some of the eminent and prominent speakers from the industry. Today we have with us Mr. Sumantra Sen, who is the CEO of Canvas Infra Capital Inc. He's in the space of responsible finance since past 25 years. We have Ashok Imani. He's a principal ESG National Investment and Infrastructure Fund NIFF with 22 years of experience dealing with from public sector to private sector companies. We have Ms. Ludwin Norrell. She's the CEO of Bridgestone LLC based out of Singapore and US, UK, India, and has been in the space since more than 2 decades now. I would also like to mention that he's also the lead, which is a workshop he'll be rolling out in the month of December. We have with us Mr. Lalit Bhandari, who's a senior environmental and social development specialist working at International Finance Corporation with about 17 years of experience in environment, social health, and social aspects, and in providing support in the social space to all the possible known clients in South Asia region. So welcome all of you all, and it's an honor and it's a pleasure and it's a privilege to have all of you all today with us on IICSR, and we look forward for an insightful and thoughtful conversation to take this momentum ahead. Over to you, Sumantra.
Thank you, Harsha, and thank you for that warm start to the session. Hello, everyone, and welcome to this very interesting discussion today. Trust all of you are coping well with work from home, hybrid. Some of you may be working partly from the offices, lock, unlock, etc. So stay safe while good work can go on. So here we are. I think we're discussing ESG in the context of the alternative assets. That is assets that are outside of the cash, bond, stocks, and include private equity, hedge funds, infrastructure, real estate, farmland, etc. Globally, also a very significant asset class at about $13 trillion. That's roughly about 12% of the investable markets globally, and also rising rapidly in the recent years, driven by the need for better returns, enhanced returns, diversified portfolios, lower interest rates in certain markets, then also the opportunities in some of the maturing emerging markets, then structural changes in several parts of the world. India's alternative industry with AUM at about $54 billion, which is roughly about less than 4% of the public markets here, speaking, is somewhat underdeveloped. But we have also seen a certain momentum in the last few years. The 2012 AIF regulation by SEBI, the infrastructure focus, the growing entrepreneurship, and the startup ventures here, they've all contributed to this momentum. So the current challenges notwithstanding, hopefully this momentum will continue in the coming years. The topic of environment social governance, or ESG, and its integration into the investment strategies is one of the most talked about and one of the most defining trends in the world of asset management today, whether it is public markets or private. Some of the market sources have recently kind of through surveys indicated that 2 out of 3 asset owners, look at the responsible investment best practices by the fund managers in their selection. And fund managers of their part, 50% of them, consider ESG factors while taking investment decisions, whether that is through SRI, screening of equities, it is through engagement, that is influencing the investee companies, looking at the risks and the opportunities, or it is, creating, a sort of a motive to create an environmental or social good, which is your impact investing. So, and then there is this larger alignment of the investment community with the UN Sustainable Development Goals. So clearly, a lot seems to be happening, where ESG is meeting alternative assets. To understand as to how, what are these global trends deeper, and where are we in India in terms of the adoption, what is working well for the industry and the best practices, and what could be done better. We have this very distinguished panels here who are here to share some valuable insights based on the vast experience that they have on the subject. So I guess let's get started with getting to know a little more about what are they doing in the current work and the recent work, and how they've been advancing the integration of extra financials in the alternative asset class. We can begin with you, Lilibet, and then we can go around. Yeah.
Okay, so exactly what you want me to talk about. Hey, can you hear me?
I think we can begin with a quick introduction of current work and how it relates to the trajectory. Yeah.
Okay, so as Asha said, so I have almost like 2 decades in the capital market. Starting, my career as a fund, equity fund manager in Europe, in France, for an asset management company which has been a pioneer of ethical and I would say a lot of awareness about social responsibility investment. Before we used to name that ESG or so on, and for which it has been very much embedded in my professional DNA, I would say, to integrate all those non-financial factors into how to select and perceive and approach investment selection. I've been equity fund manager in India and an investor at large on private companies as well as unlisted. So you have like a large background on investments. So Bridgestone, my company, is based out of Singapore and India. We work with usually with the US, Europe and Asia Pac. What we do is usually we advise, either institutional investors and or corporation with a small or large, listed or non-listed, on their development. And we mix, this ecosystem together. We are also investors, and as such, naturally, our approach is quite holistic, in terms of how to take into account, sustainability, because we are very sensitive to this subject in terms of how a business model has to be articulated for the long term, first, and second, how what is the impact, and impact is very large for us, but impact is inside a company and outside the company, and as such inside is a lot of a way of articulating that around things like her governance and ethic. We love to hear about what I have to say a team of founders or managers, top managers. So this is the way we approach that into our advisory or investment approach.
Thank you, Ludwig. Lalit, would you? Yeah.
Okay. Thank you, Sumantra. So I think, IFC as a part of World Bank Group, everybody knows, we are the private sector investing arm of the World Bank. And as part of that, we actually invest across the entire spectrum of industries. I mean, we have some exclusions in terms of negative industries that we don't engage with. But apart from that, pretty much everything from infrastructure to manufacturing services, venture funds, microfinance, asset finance, and even distress assets, affordable housing finance. So everything under the sun that one can think of under the private sector umbrella. We also invest indirectly through the financial markets, where we cannot invest directly because of the investment size, because we generally look at a typical ticket size to be to invest in a company. So where we and also from the perspective of developing the wider capital market, so we have a huge portfolio under financial markets where we invest in banks, PE funds, and other financial sector clients. Our investments, through these financial market clients, again, sometimes these are very targeted in terms of where we know where the end use of funds is going to be. So, for example, we invest in climate-related investments or climate-smart investments, or we target it towards SMEs, or let's say women-owned SMEs, or we target it towards a particular education, for example, education or health, very targeted interventions. So that's the broad spectrum. And then again, on the product side, we do equity, quasi-equity, and a whole range of debt instruments with these partners. Now, as part of our environment and sustainability framework, we apply the framework across our investments, whether direct investments or through financial markets, and we have a slightly streamlined approach for financial instruments or investments through financial markets. But generally, the framework remains the same in terms of basically looking at that we are not doing any environmental or social harm in the process. And we are mitigating the risk, whatever environment and social footprint we have through these investments, how we can mitigate and minimize those, through time-bound action plan. So that's broadly the spectrum and the depth. And for every investment, it goes very deep in terms of how we evaluate these risks and how we mitigate the risk going into the investment.
Great, Lalit. I think we'll discuss some of those in detail subsequently. Ashok, over to you.
Thank you, Sumantra. It's such a wonderful panel which you have selected and put in front of in today's evening. And I really appreciate your effort which you have taken over the last couple of days. And so just without further getting into details. I just quickly tell you about my organization and the current affiliation with which I am, and also just briefly touch upon the previous like organizations with which I was associated over the last 2 decades. So currently I'm associated with NIF. I'm leading their approach to investing into the responsible investment for impact through the ESG factors which we consider into our investments across the fund, across the 3 funds which we have. Basically, NIF is investor-owned collaborative platform which is operating at scale with long-term funds, the 3 funds which we have at NIF. So India's largest core infrastructure fund, one of the funds which we have. Then we have India dedicated fund of fund business, and then we have the largest India focused private equity fund. So our investments are building like basically large scale infrastructure platforms, investing in consumption-led sectors across the country, and securing the future of securing the future basically through the renewable investments and other investments into the responsible investments, you can say. Over the last 2 decades, as I mentioned, more than that, I have been associated with financial institutions, primarily 2 of the key financial institutions, IDFC and GIP, prior to. And at those organizations, I looked at basically from dealt multi-stakeholders and across investors, DFIs, your investee companies, communities, understanding the how the ESG aspects are integrated within the business. And during this process, I've also looked at some of the issues around integrating the ESG aspects and taking it to a higher level of becoming signatories to some of the important platforms in the sustainability framework which we had adopted at that point of time. So with that, I will stop here and get into the discussion.
Thank you, Ashok. So I guess let's get into the discussion straight away. In my introduction, I mentioned about the some of the recent surveys and their findings about the way asset owners as well as fund managers are looking at integration of ESG in their investment decisions or manager selection process. Those are significant numbers. We're talking about 50% fund managers looking at ESG globally, and 2 out of 3 asset owners wanting their fund managers to be, practicing, the best of responsible investments. Now, those are big numbers. All of you have worked in the India, South Asia market, so just, I think, to open up the discussion and especially the backdrop of what is happening, not just the global defining trend, but also what we see as, I would say, a significant step by SEBI in terms of, mandating only the mutual funds, but also the AIs to kind of follow a stewardship code. And within that, clearly marking ESG for not only the how do you engage with your investee companies and help mitigate those. So basically, wanted to understand, all of you work with different actors here in the financial markets, and so just want to understand from you, starting with you, Lalit, that how do you see the adoption here? Where in ESG, as a I would say something which is like beyond, let's say, what is being told to them in terms of a regulatory piece, but in terms of adoption, understanding the best practices. I mean, what trends do you see in India?
Okay, so we'll keep it to AIFs only for the moment because otherwise it's a very big spectrum. I mean, looking at the numbers that you mentioned, I won't doubt them because there has been an increasing appreciation as well as that appreciation translating into adoption of ESG practices. That is what our experience has been globally as well as in South Asia. And in South Asia, I can talk about the countries like India, which primarily is the main market, from IFC's perspective, followed by, let's say, Bangladesh, Nepal, Sri Lanka, Bhutan, and Maldives. So the integration or let's say the adoption of ESG in decision making is no more let's say a matter of debate. I mean, it's more or less integrated to the extent that of course it's a spectrum. You will have early adopters and you will have very mature fund managers who are into their second or third fund, and then over the years they realize that there is a value in looking at some of these aspects. So much so that now, and this is a very recent trend that these fund managers are now also looking at premium, ESG premium, because of the good work that they do at the portfolio level. Now, whether that is at a exit premium that they want to look at, or whether that's a buy side ESG that an incoming investor is looking at, is still debatable. But then if you have done good work in your portfolio, if you have brought your portfolio from baseline to whatever 20%, 30% improvement, you should actually look at asking for premium. That also happens at the time of, let's say, when you exit through IPOs. A good a company with good corporate governance and good ESG performance, good human resource practices, is bound to command premium. So I'll not be surprised if this becomes more of a trend in coming 3 to 5 years, where fund managers are actually seeking ESG premium, if they have done good work in their portfolio.
That's interesting. Thank you, Lalit. Ashok, your thoughts on how do
so
you
I
see...
second that, very perfectly put by Lalit. The thing is, like, asset managers are looking at they have clearly moved from compliance, check the box, to bringing up the standards into the integration which they are doing for the investments handled at their end. So they have realized the window of opportunity which is available, and trying to get into the adopting the standards and then following it, and the value add which is being brought to the investment through following all these standards and all. So obviously, once they they adhere to these standards and bring that prove the values which are accrued to the investment, that always claim the benefit. And in terms of when they get into the exit mode, the state process which normally is taken up in the investment cycle. So when they reach at the exit point, it is for them it adds value, and they can claim the premium. And obviously, to get to that stage, there needs to be a complete change in the mindset. So if you look at for instance, initial asset managers and the fund managers who were there, they had initially like the adoption for these, embracing these ESG standards took a while, and afterwards, like with the investors and who had the public monies and fiduciary responsibilities, they getting into it. So then it automatically like changed the mindset, and the fund managers are now like most of, look at all the even IFC, ADB or AIB, most of the funds which are put on their like disclosed officially. So you will see that all of them are ready with their policies, their systems to take up the investments in their respective areas.
That's great. In fact, Ashok, the sector that you've been associated with is quite interesting because on one end, the sector itself is closely aligned to certain development goals. They're by themselves, they're supposed to address some of the gaps and do that. And yet, many of them have their own set of ESG issues. So it's good to hear from Lalit that if not immediately, his thoughts are that 3 to 3 years or so, we would see that the value driver could be the risk premium or the ESG premium, here, whether, which is, I think, beyond the fiduciary duty or the checklist or regulatory piece. Yeah. Interesting. And Lidwin, what your thoughts and the space that you work in, how have you seen the adoption and
Sorry. So yeah. So I would say that for listed, so whenever I have like interaction with AMCs in the listing world, the question is no more. Okay, so it's obvious, that ESG is coming. It's not peaking, it's coming. There is a framework decided by India. There are frameworks, influencing, and they also receive, money from institutional investors, above, who are pushing, for having this ESG in place. So the way they are going to adopt, because we have AMCs, for instance, in India. Not everyone has an ESG fund, or have done a fully integrated ESG process within the range of their product. I think no one has done that. Perhaps in a way, vendors, the rest of the AMCs. Not that much. They're working on that, very seriously. But some are still, trying to contemplate the way they are going to articulate ESG within their process, right? So this is for listed. For private, private equity or venture capital. So I will begin by Big Brother. Big Brother being a private equity. That I would say that there, private equity guys in India are mostly, are MNCs, right? So they are, working on that. The reason being is like, close to 80% of their LPs, limited partners, so investors within those, private, equity funds, are themselves very attached to, an ESG integration within the process of selection of investment, and to prepare those companies. For the good sake of the IPOs, right? So when you go for an IPO, in practical, why it's so important is you have to show to the regulators, that you have, enough background in financial, for instance, but also enough background, in integrating all those, concept of disclosure, environmental, social, and governance. So it's very major. However, it's quite surprising, because even if it's picking up and it's very important, still among the general partners, so managers, founders of those, of those private equity funds, the urgency is not that much, because it's difficult sometimes to impose or to to integrate that within their process. But it's there, for sure it's there. Also, it's very influenced, the way they, how private equity choose, the companies, because they also look, into business model that will ease, this process of picking up, with ESG and sustainability in mind. So where a business model will show how it can be benefiting for the environment and the social, how the team is growing, things like that. For the venture capital, so small brother, we have to be a bit more indulgent here. I think but still it's very much into the mindset of the people. So there is no obligation, there is no regulation for small companies, right? So it's much more willingness, and it's where the beauty happens, because it's, if we start from there, or we know that there will be a good habits taken at roots, right? And then that will ease the process for the private equity rounds, and then when if the company go public, and so on and so forth. So I would say that this is our aware, they are sensibilized to those questions, whether they really engage on the question of ESG or ESG adoption, sustainability adoption within a startup. I would say that it's still a bit early, but they're very sensitive to pick up again a startup which is going to show a business model which is going to be ESG very much compliant, whether how the founders are giving enough transparency and emulation within the company and outside the company, and to engage with their stakeholders in the ecosystem. And ultimately those concepts are building up, and it start to be in the vocabulary and the reflex of each and every investor, but still it's still very nascent in the Western world. So in India, I would say that yes, we have this lag of time, for adoption, but I have no doubt that it's going to pick up big time, because there is a really a big trend around, and it's very important as for the founders, as for the investors, because we interact much more and more often, also, so it's really picking up.
Great. So I think we've got very exciting perspectives here, and so whether initially mandated by a regulation or maybe a sort of a mandate by the investor, or it could be in some places the model itself is such that you incorporate sustainability in there. I guess we see that it's going somewhere where Lalit mentioned that eventually it will be about that whether ESG performance can drive a premium for the fund manager and also for the companies in creating value So I think that's the way it should be. The value creation should be seen that way. But having said that, in the various spaces that all three of you work in, what is the suitability of using ESG? I understand that Lalit, you work with the financial institutions. Some of them are, I think, large organizations. In context of alternative asset class, how suitable is ESG, and what are the challenges that you see that when you talk to the institutions that you work with, the fund managers that you work with, what are the challenges that you see in terms of taking the ESG integration to the next level?
Okay, so I think across the spectrum of fund managers that we work with, I mean, we are never more than 20%. I mean, we always take minority stake, and most of our fund managers also take minority stake in the companies. There are a few who have a buyout strategy, or they invest a major portion. But generally, these are minority players. Even in that case, I mean, they always try to get a board seat. They always try to get an influencing mechanism through which some of these important ESG parameters could be incorporated into the companies. And again, also on the investee side, I mean, it's a whole spectrum. I mean, first generation business owners to proprietorship businesses, and but in very interesting segments, across the spectrum again, in food, in textiles, and in some cases, companies who want to professionalize, because now the second generation or the third generation wants to take it to the next level, and they are mostly foreign educated and understand the lingo, understand the concepts, understand that it is important, and with them it's not that much of a struggle. With some of the let's say family-owned businesses or proprietorship kind of businesses, it does take some time, because even for them it's like a change of let's say attitude towards some of these aspects. The whole governance structure sometimes needs to be reworked, and with that governance, of course, E&S also gets built into it. But overall, if you look at, let's say, I mean, E, S, and G is very logical. I mean, it's common sense, right? So if you do any activity, you should make sure that it is not creating a negative impact. So by that sense, it's quite logical and common sense issue. And if you look at let's say any country, I mean, forget about India or this region. Look at any country, you will have laws against or laws for all of these elements: environmental, social, governance related. What these some of these international standards try to do is to integrate these E and S and G into an ESG kind of framework, which is really important, because you need to see that holistic picture. If you are only looking at these aspects in isolation, then you can achieve only as much as your efforts are. But when you integrate it, the output or the let's say benefit is multiplied, because you whatever you do has a buy-in at right at the top, and then it trickle down all along the operations. So it's I think in terms of let's say the suitability, all of these standards, international standards, are very much suitable, as I said, because the law already covers most of these aspects. Probably, let's say 70% of what the international standards would require, there would be a corresponding legal requirement in the country. So even if that much is completely ensured, you are 70% there, right? So and the only top up of 30%, which is of course the extra legwork that you need to do, is the integration, is the disclosure, further transparency, reporting, and improving on the fringes, and that makes you, because the international standards are developed after, let's say, a lot of research and experiences from across the globe. So you learn something from other geography, something which worked in Africa, can it work in a particular context in India? Why not? Vice versa. So it makes you global citizen, and your company is, or your let's say, the portfolio is then as comparable with global peers, right? And it has impact on your operation. If you have a supply chain, the supply chain sustainability has direct impact and effects of these issues. So suitability is I think there is no question about it. Challenges, again, as I said, I'll come to one point that Ludivine made related to VCs. And that's a very interesting observation, and I fully buy in what Ludivine was saying. Startups, most of the time they are engaged in future rounds, because they have to raise funds, and then from one round, A series to B series, and then they keep on doing that. So you need somebody to hold their hand in terms of ESG, so that when they're small, they can integrate it, and as they grow, they have a buy-in of the ESG matters, and when they become sizable, by that time you have already built into that knowledge into the company, and then they can just take it forward from there. This is although initially the risks or the ESG issues might look very small, but these companies also grow at a very fast pace. And an acquisition of another small company is just a matter of time for them. We have seen these companies, some of the very small startups grow into really big unicorns, and then suddenly their footprint increases manifold, right? So if at the initial stage itself, if their hand is held very well, they are supported in integrating these ESG matter, then it can go a long way. It can ensure sustainability on a lot of spheres. So now coming back to the challenges, I would say, I would primarily see that in capital market investments. I mean, where you have, let's say, very limited information available in public domain. So data available in public domain is a big thing. I mean, it's a challenge. I mean, especially when you're talking about, let's say, even for private equity, if you're looking at pipe investments, in private equity investments into public equities. So where do you get that data from? Disclosures, yes, there are mandated disclosures, and then there are voluntary disclosures, and then there are these reporting mechanisms and frameworks which also require certain level of let's say disclosure. But one has to really make sure that the data available is reliable, based on which you could make your investment decisions, and that the data is then corroborated over a period of time. So that challenge with the listed equities, listed entities will continue till better disclosures and better research and data availability is there. Second, I would say that technology will have a big hand in that. The way data is seen today is changing very fast. the way data can be interpreted into information is also changing very fast. So technology is going to have to have a big imprint in the way business will be done in future, including like, for example, let's take the example of this pandemic. We have been working from home for past 6 months or so. But we have not stopped making investments. We are still making it. We are still making judgment based on data, and the data is not directly in front of us, right? So this is where data availability and data validity will become more and more important in future. So right now we may be primarily looking at our known clients, our existing portfolio, and giving them additional financing. But we are also doing new clients. We are also working with new investments. So we are still looking at how this data thing can be enhanced, and how we can rely on other public available information. I think the other probably thing on my mind is that domestic investors need to ask more questions on ESG. I agree with Ludivine and Ashok that LPs, domestic LPs, they are doing that. But then it has to. I mean, that's a constant improvement parameter that has to continue. I mean, it should not only be when you're looking for international funding, or it should actually get into your DNA. And when you start asking more questions, because you are the source of fund for them, so you can move this small market very well. So those will be my take on this, in terms of let's say suitability as well as the challenges. Sorry, you are on mute, Sumantra. Sumantra, you are on mute.
Back. Yeah. So what I was saying was that, that specific to the kind of sector that you worked in, and particularly these two assignments where I think you worked with companies where your previous fund may have invested in. Now I think you are working also with the other funds. How do you see the suitability? I mean, we've understood the adoption, which the global trends also tell us that there is an adoption. Asset owners are looking at it, asset managers are looking at it. In terms of India, how do you see the suitability of, and what do you see the challenges? In case you want to look at the full spirit ESG integration in your operations.
Sorry, it's for me, Sumantra?
Yeah, sure, yeah.
Okay, sorry. So basically, in terms of the suitability over the years, what we have seen, as Lalit has mentioned, irrespective of what the stake and in which you get into the investment, the thing is there is a perceptible change throughout, and the regulations have played a major role. Over the years, there is a clear-cut transition which has happened, and even the RBI had come up with lots of regulation within the country, and in terms of international forums which have set up on different asset classes, the requirements which have to go into assessing the investments and all. So having said that, in terms of the fund investment managers, for instance, have taken note of it, and across the asset classes, they have responded to these requirements. And now it is not like in terms of something which is any investor is forcing. Earlier, the drivers were like to access the capital, the investor requirements were to be met with, and that's how this entire ESG requirements were seeded into the organizations, right? Or the funds which were set up. Even, for instance, if I recall IDFC's establishment way back in late 90s, it was like the peers who had well-evolved ESG standards and all, they had brought into that and asked, they slowly started seeding into the fund managers and taking it out. So that from that stage, it has now moved to a stage where fund managers are taking up on their own in terms of whether it is through non-financial reporting and the disclosures which are happening across the platforms. So through that, they are now taking it up on the ESG factors, which are very important now. So in that, furthering like NVGs and all, which were brought in by the government, and which are voluntary at the moment and taken up by 1,000 companies, listed companies at the BSC and NSC. So apart from that, like in terms of the other voluntarily happening events which are happening within the fund managers are taking up the disclosure on their own. And also like in terms of putting up the systems and procedures in a way like which is now taken up a different level altogether. So in that sense, the fund managers, the investment managers have realized the suitability and trying to adapt that. Coming to the challenges now like at different asset classes, be it venture capital, private equity, large private equity funds have realized, and they have the entire like organizational setup put in place with the dedicated E&S resource looking at it, because they have the resources available at their end. But while coming to the venture capital and all, it's a little tough in the sense that to get dedicated resources in place. So that's one challenge which we find very important to be addressed in order to make them equip them for handling the ES risks across the platform. So what we have observed across the VC and other social sector funds is that they have found a midway out in terms of getting support from external advisors, capable E&S advisors, to look at the key risks and opportunities throughout the investment process. So that way, the challenge is over a period of time, it will get ruled out, and maybe at the moment that's going to be a major one across the asset class, this VC and other funds. Coming to the real estate asset class, which we have seen in terms of they have apart from moving from the compliance orientation, which is basically driven by the regulatory regime which is existing in the country, they have now gone ahead on getting the sustainability path, by getting their buildings for energy efficiency and other certifications which they get. So they prepare themselves and bring that out very clearly. So the real estate asset class, like one of the like major investor, BlackRock, has got so much of real estate investment which has happened in the country, like one of the largest owner of office space within the country. But with the changing COVID times, it is now difficult, like whether that would be a prudent investment at this moment or going forward, maybe like how to deal with that. Obviously, like with so much of norms and all which are to be looked at while doing this entire office space and building the office space, that will be looked in a different level altogether. Apart from these, like across the investor asset managers, we also see like once the systems and procedures are established, they need to be in terms of executing each of the investments which are happening, integrating with their investment cycle and all that. That's a challenge at the moment, like with the asset managers and also the fund managers who are looking into it. So that's something which has to be ironed out more closely, like in next couple of, I think it will take some time, and with the emphasis, as Lalit has also mentioned, once the domestic investors also toe the same similar lines on the requirements, I believe that challenge also can be overcome. So with this, I think these are the major ones which I feel are the ones which I see as posing a major challenge. One experience which I want to share, like in terms of, again, it is from my earlier association, like EP, equator principle, getting into that, which are like similar to IFC performance standards, the standards which are there at EP. So what has happened is when IDFC became signatory in 2013, it took like major, like over a decade time for IDFC to take that challenge and get on to become a signatory. And in that period, like we had by then exposure of all the big LPs who had supported IDFC on various fronts, and having that experience helped us to take the plunge and at that point of time become the EP signatory. And after that, till date, there were so many discussions which have happened with domestic investors to imbibe the E&S standards which were existing till now. So none of the domestic investor could take the plunge, and that's something like a issue to be looked at maybe. But what I am saying is, like, if you have very clear-cut mandate set for yourself, then I think it is easy to tread the path of sustainability. Yeah. Sumitra, you're on.
Well, thanks for sharing that, Ashok. I think, yes, I think both of you pointed out towards one of the areas where the challenges become a little more, I would say more visible, is the venture capital space. And Ludwig, here you work a lot with the startup unicorn companies. What are your thoughts? I mean, where do you think? So you mentioned, just before this question, you were talking about the mindsets and some of the things that are changing gradually. But beyond that, when you're working with these, I would say the startup companies on the growth track, a lot of other issues on their mind. What are the challenges when you and your team talk in terms of integrating ESG? How does that work?
Well, I would say that our integrating ESG are necessarily it's mainly a challenge because of as Lalit said, it's data, so you have for even for a company, whether it's small or big, in fact disclosing about some of the aspects on the factors of ESG requires some tools, some tooling, some checking, some monitoring. So that's why in fact ESG is absolutely a wonder, or in terms of monitoring, for a company and as well for an investor. But it's challenging to put together, all those data, and to have a standard, because you have many standards for reporting. So you can also have different ways of integrating ESG as well into your investment process. And everyone is after is like in a wait and see mode sometime, whether the regulators are going to come with a taxonomy, or a classification, or standardization, and I would say on that it's good and bad. So I think it's good to have this minimum push up for everyone to at least disclose a minimum, right? So that, like this, we build up fantastic, very huge database, where everyone has, more or less a way, a guidance, to disclose the minimum. But I would be very sad and very offended, as an investor, if the standardization would be 100% perfect, and obviously it's not going to be like that. The reason is because country-wise, sector-wise, it's very difficult to get to that point, and it's good for us investors because. Think about it. We also have to do our work. So to do this homework. So the way we have been finally educated to integrate, ESG, into the process is through the help, of data providers, and they are mushrooming. So you have the usual suspect, MSCI, Bloomberg, Refinitiv, Thomson Reuters, and so on and so forth. And you have, mushrooms, everywhere, with particularities, which is good. The things that swallow a little bit of the work to integrate those data, and that means that you have dedicated teams who are going to to really put their hands on to retrieve this number of data. So obviously for small companies that would be very difficult. For bigger companies, even private, that will be, the work will be done for sure. But after that, after this level, we still need, to pick and choose, right? So at least, as a stock picker, I cannot, even in a quantitative way, they would love that, because they also have to build up what we call the alpha, so the performance, the extra performance vis-a-vis, a benchmark. And an excellent way to do that is to do our own homework. So my friends in the capital market, what they are doing, for their own fund, asset management companies, they have it up in their own systems, to integrate all this. So they take from the data providers, and they also build up their own extra mile or last mile methodology, I would say, in order to select. So on the same model, I would say that for a VC, you come, you have your due diligence, methodology in hand. If you don't have that, that would be very surprising. So it will be very amateur, right? So we have, this matrix of questions and check that we have, to really assess a company, and those questions will also have to consider again. To know what's saying, a very good point is like most of the domestic, coming back to India, most of the domestic investors must, ask more questions, and in fact, they do that probably. They are very trained about the corporate governance in India. It's very central. As it has always been there. We also had our very big scandals like Satyam, Gitanjali, Kingfisher, and so on. So obviously, we know that it's very important, the corporate governance, but how those social and environmental factors will also come into play is just to maybe complexify a little bit the homework, to go a little bit beyond what the data providers will give us, or to find the excellent data provider that is going to really swallow the work for the domestic investors, because I'm not seeing like an MSCI today, or or big company rating scoring company are doing a very profound deep work on the data for smaller companies. So imagine for very private and startup. So that's why in fact the answer to that is to really rework a little bit more the matrix, integrating those factors when we have to interact and engage with funders.
Great, thank you, Dadwen, and I will just stop here and check with Harsha. I think we are past that allotted time. I just wanted to kind of wrap up with a quick round about any specific suggestions or best practices that you would like to see that they think will take it forward and make it like actually go the direction that we said, that really see value in it beyond the regulatory push, etc. And the participants in the market benefit from its integration. And across, like I said, the large investment sectors like infrastructure, or it could be venture capital, whichever space.
So you want me to start?
I mean, we can start with you. I mean, any because I had some thoughts, some more questions, but I think we are well past our time. So if you could just some way forward suggestions from you.
Yeah, I think I'll probably repeat myself on a couple of instances. For example, let's say asking more questions. It's really relevant, because for let's say regulator to come up with a policy all encompassing and covering all kind of investments, it's going to be really tough. Right. So at some level, it has to. I mean, it will be tough. It will come with time, but then we should not be waiting for that. Adopting any of these international standards which integrates the isolated E, S, and G into one is really important. Data points and how we translate that into meaningful information to make informed decisions is really important, and the role of technology in doing so in coming years. Also, I think what is important to see is that the whole spectrum of ESG risk is also shifting. I mean, and therefore there is more and more demand on transparency and reporting to not only to investors but to general community. So that is something which needs to be thought through, which needs to be adopted and integrated as part of ESG as well. From the risk perspective, I think it's time that we start talking about climate related risk. That the other things which are really going to be important are human right related risk, gender-based violence. Resource efficiency is again going to be a real risk, not only for operational efficiencies of corporates, but also for, let's say, the supply chain sustainability or product stewardship. If you may encompass all of that into one. These we have to continuously align the lens by which we look at these risks, because some of these will really be the showstoppers for in terms of way of doing business in coming years.
Thank you, Lalit. Ashok, very quickly,
Yeah.
over and above what Lalit mentioned, and any suggestions for taking this forward?
Basically, I would harp on this fact that any investment manager or fund manager, they have to have a thoughtful environment and social management system in place. So it's just plain thinking and capturing the key risks and opportunities which are existing for that particular asset class. Just think through that and bring it in a manner, and that will take care of all the things which are listed out. So it will cover your climate risk, it will address your human rights issues, depending upon your business and depending upon the asset class which will be looking at it. So that's my take on this.
Great. Ludwig, quick ones. What would you recommend?
Well, there are absolutely the same. Should not be, a debate anymore. The debate would be, to see, how people have articulated that, and how, to really, benefit, or enlarge, the strategies, of investing, integrating ESG. As a lot of move, or change in India has come from, the private, sector. I will not, wait for the regulator, to push, for more stringent, laws. Just go ahead. It's in the habit, of all, investors in the West. There will not be, a move backyard. So we should just go ahead for that. That's it.
Great. So with that, I think we come to an end, and we'll seek advice from Harsha. Do we have any room for questions? I think we're well past that time, so we leave it to you.
We've well past the time. So the best is you give your email ID so people could reach out to you directly. And it's been very insightful that we are organizing something like this. And India has a very long way to go, and it's only with all the support and presence and advocacy that we are doing can we make it happen for everyone. And I would like to thank Sumantra for organizing this, Mr. Imani for considering to come on the platform and sharing his thought process. Ludovin, as always, wonderful to have you with us today again. Mr. Bhandari, it has been great listening to you too, especially on the startup and the ESG front. I would like to applaud you. We had a big auditorium, but now that we are on the web, it's wonderful to have you all.
Thank you, Harsha.
Thank you. Thank you so much.
Thanks.
Sumantra.
Thank you, Sumantra, for organizing this. Thank you, Harsha. It was pleasant talking to you guys and interacting with old friend Ashok and Ludovin. Good to see you, Ludovin. Look forward to more of these.
Pleasure. Yeah, this was great catching up, meeting everybody.
Great. Thank you, Ludwin. Thank you.
Have a good evening.
Pleasure.
Thank you.
Thank you.
Bye.
Thank you,
Sumitra.
who have been present today, Ms. Preksha, Raj, Ravi, and Prerna, Ratauri, Sheeni. Thank you so much for being there, and thank you for our esteemed panelists.
Thanks. Bye.
Thank you. Bye-bye.